Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. So we got markets deep in the red. Four major indices down anywhere from 1% to 2%, but off of those session lows. A lot of volatility today, Kev. But let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio.com, joining us for discussion on some sentiment data. Welcome to the show, Landon.
Hey guys, good to be here. Thank you.
All right, so we're talking discount retailers. We've got Dollar Tree earnings tomorrow. What kind of data are you seeing? You've got to figure, Landon, with all this inflation going on, that people are going to have to start going to these stores, whether they want to or not, because the price of everything is going up. Are you seeing positive data on some of these discount retailers?
Yeah, actually, we track a lot of that kind of stuff. And one of the things that we look for is what we call deal discovery. And so that is where people are hunting for a good deal, right? We have a lot of different keywords and phrases that we're looking for that mean deal discovery, that mean I'm going to try to save some money. I'm looking for a good deal. And that's up 34% year over year. That's a big move. And so you're absolutely right. Inflation is at, 7.5% this year. Again, I'll take the over on that, but it is very high. And so people have been forced, and you can see it was a pretty steady trend, pretty sideways until over the last year or so, it started moving up. People have been forced to try to stretch those dollars as, everything is getting more and more expensive. So it's not, it's inflation is part of it. There's also supply chain fears that people are going through. Inflation fears are plus 350%. People talking about inflation. Supply chain fears are plus 550% year over year. So really big numbers. If you look at retail over this last month, retail in general had a plus 3.8% month over month number on revenue. Just U.S. Not LikeFolio data, just revenue data from the U.S. And that's the biggest move in over 10 months. It was almost double what was expected at 2%. And a lot of that has to do with, the dollar is worth less. So everything that you buy is just a little bit higher in price. So there's a strong demand moving people into these directions. And what I like to do when I'm looking at a company like, Dollar Tree and they report tomorrow, is to look at some of the competitors. How do they compare to Dollar General? How do they compare to Five Below? And so what we're seeing, and when you kind of look at those three, is that Dollar Tree is doing fairly well. They had a pretty negative reaction on their happiness to the increase in price. They went from $1 to $1.25, so there's 25% inflation for you. But they actually moved down about 8 points on happiness, down to 58%, whereas Five Below doing much better, up in the 73% range. So, up and to the right is where you want to be on this chart. That means that more people are going to your store and they're happier. So Five Below among these three is the clear winner. Dollar Tree, though, is doing well as far as more people going to the store, at least according to LikeFolio data. And when you look at LikeFolio data, what's interesting is, the revenue last quarter was, I think, $6.4 billion. They're expected to be around 7.1 based on our purchase intent and going quarter over quarter. So they're expected to have an 11% increase in revenue. Our purchase intent is up 13%. So we're pretty much in line. Maybe there's a small beat coming, especially when you factor in the fact that they have a higher price that's been rolling out, right? They didn't flip a switch and go from $1 to $1.25 on all their stores, but they did do it in 2,000 stores, and they're slowly rolling it out to the rest of them over the whole quarter. So I think that if foot traffic did go up, which is what we're showing may have happened this quarter, and price went up, I think that could be a good sign for revenue going up, but depends on what analysts actually expect, because across the board, if you look at Dollar Tree and Dollar General traffic over the last quarter, in their last report, traffic was down and the average ticket size was up, whereas with Five Below, traffic was actually up. So I think that's one of the reasons that Five Below is kind of standing out a little bit here. And I'm, if I had to pick one of the three, clearly it would be Five Below. But if you're talking about a company that reports 4 weeks from now, and Dollar Tree reports tomorrow, so this is the one that we're going to be focusing on. It has, on the LikeFolio side of things, it's a pretty neutral score, slightly bearish, -6, pretty neutral. I wouldn't be surprised if they beat on revenue, but I don't know what the street's reaction is going to be, because it's no surprise that they raised prices from $1 to $1.25. So I think revenue should go up. They're not going to lose that many customers based on that. They're not going to offset that. People have to pay more because they have to pay more everywhere else. So I'd love to hear your thoughts on it, though, guys.
Landon, it reminds me of the Jimmy Buffett song with quarters in his penny loafers, right? when you look at what inflation has done now, and Dollar Tree moving to $1.25 tree, I don't think that's frankly enough to really disrupt. And the stock price says that, right? It's bumping up against the all-time high, just only slightly off the all-time highs. But correct me if I'm wrong, Landon. You've seen a lot of data this week that savings accounts, the levels are starting to come down, and the overall economy is starting to potentially not peak out, or has already peaked out. Isn't a slowdown in the economy, or a potential slowdown, or less money in your savings account, isn't that right in the wheelhouse of what Dollar Tree offers? And so I think, you're seeing, of course people aren't happy if they go to a dollar store and everything's $1.25, but that doesn't mean they're not going, right? I mean, you're still seeing a bump in the overall purchase intent. They're just not as happy as they were, which I can understand. But what I'm asking you is all this, the current state of the economy with savings accounts and slightly higher prices, isn't this all just leading right, like all roads lead right to these discount stores? And believe me, I get Five Below and why they're the favorite, but Dollar Tree's got to be right on their tails, correct?
Yeah, I think so. I mean, you're right. This is lobbing one in, right, for them to knock it out of the park. When you get into a situation where you've got inflation, you've got the economy slowing down, you have people trying to stretch their money, of course, Dollar Tree, Dollar General, Five Below, they're all going to do well. And you can see that in the stock price, right? You can look at a lot of companies that have much worse stock charts than Dollar Tree right now, just as you talked about. It's been really high, and actually the market reacted very positively to the increase in price from $1 to $1.25. So, forget what the consumers think. The market really liked it, and it was needed. I mean, obviously, with the cost of goods going up, you have to increase that. But you're right. If you're betting on a bit of a slowdown, if you're trying to play defensive, you've got things like alcohol, casinos, and discount stores, right? That's a lot of great plays for defensive stocks. If you're going in the defensive sector, based on LikeFolio data, I'd lean more towards Five Below. But Dollar Tree's not bad. I mean, they've done a pretty good job. They're increasing purchase intent based on our data. The happiness is struggling, but I'm guessing that's going to come back when people get used to the $1.25. What's interesting about that is they said that they've had that price, $1, for 35 years. I did a little calculation on inflation. That $1 back in 35 years ago, it was $28 today. So can you imagine what the difference in that store has happened over the last 35 years, where a lot of things were $28 or less. Now they're $1.25. It's incredible. But they're changing with the times. But Kevin, your point is absolutely correct. The more trouble, I guess, that the economy gets in, or the more inflation, all that kind of stuff that's been happening, that is just, it's a layup for this kind of company. But my point is, I might consider Five Below a stronger, longer-term investment at this point than Dollar Tree.
Okay, Landon, so it's called Dollar Tree, right? And they're going up to $1.25 in price. You know what that just screams to me at this point is really low margins. And you've got every inflationary pressure on these retailers, whether it's transportation costs, inventory costs, wage costs that are rising. So you've got slim margins in a business that really can't raise their price that much, right? So when you look at those inflationary pressures, along with the Omicron variant that was pretty prevalent just about a month ago and probably slowed down traffic for them, is that where you're seeing some cracks in some of your data where you're not that bullish on this name due to the fact that there's a lot of headwinds for this company, even if the revenue beats because they went up to $1.25, maybe shrinking margins might hurt them, and then also rising inflationary costs. Are you seeing any data around that lower traffic potentially from Omicron might hurt this quarter?
Yeah, I think you're right, because if you look at when this quarter was, it was October 31st to January 29th. That was their fiscal quarter. And of course, you got the holidays in there. And so people, obviously numbers are going to be up quarter over quarter. So that's why there's a 11% increase expected coming from this on a quarter over quarter basis. But once you get into, if you fast forward a year or two from now and these kind of pressures are still there, it would be really tough for them to come back and say, well, you know what, we're going to go up again from $1.25 to $1.50. So I like that what Five Below did, where they said, you know what, we were 5 and below, now we're 10 and below. And that gives you way more room, right? You double it, that gives you way more room. They only went up by 25%, which is a big number, but you're already dealing, just like you said, you're already dealing with razor thin margins. So what if this continues? What if inflation goes from 7.5% to 10% or even more? Cross your fingers, knock on wood, it doesn't happen. But what if it does? This company could actually, get into a situation where they got to do it again and again. And that happiness number, it's always something that we look at long term. I think it's a great predictor of consumers wanting to spend money at that company. Five Below ripped that Band-Aid off a long time ago, and I think people have gotten used to it. The happiness at Five Below, 73%. At $1.03, it's now down to 58%. It's a big gap. 15 points is a big gap on that number. I do think it'll recover as people get used to that number. But if they get used to it and you do it again, then you're in big trouble. So I really want to think about, how much inflation we can expect over the next year or so. And, that's above my pay grade, but I fear that it gets more and more. And Dollar Tree, they maybe shot their only bullet, and it might not be that big of a bullet, might not be what they need.
Yeah, and their footprint, the scale of the amount of stores that they have, and oil at $105 a barrel. Hey, Jerome Powell, there's some inflationary pressures out there. I think guidance is going to be key for this company, but great data as always, Landon. Appreciate it. Have a great day.
Thanks a lot, guys. Take care.
All right, that's Landon Swan, the co-founder of LikeFolio.com.